I'll start off with you. How do you sort of assess the two pieces of news that seem to be putting pressure on the shares right now, on top of Tesla just being in the wrong part of a market that seems to be cycling away from growth?
Well, we've seen the shares rally 70% after the announcement of the share split, and so seeing a little consolidation doesn't surprise us. It seems actually healthy for the stock. Certainly these are a couple of small catalysts that I think were not unexpected for the stock. Certainly, seen some trimming around, mandates for investors is unusual. But then also the company's supporting the balance sheet with an at-the-market deal also is a little bit of a change for them from a strategy, but it's taking advantage of some dynamics, and we'll see how they wrap that up and at what price they wrap it up. But I think there's plenty of good uses for that capital as they go forward.
Yeah, Joe, how do you sort of think about the company's what it seems like a change in position? I mean, Elon Musk has said in the past that the company did not need to raise capital. That didn't necessarily mean it wouldn't, out of an abundance of caution and just conservatism when it comes to the balance sheet.
Yeah. Well, to be honest, Colin's a smart guy, and I agree with him. I'm going to suggest the following. I don't think Tesla should raise $5 billion. I think they should raise $25 billion. They've been handed this enormous market capitalization. They're a growth company that, if they need to meet investor expectations, has to build a whole lot of factories over the next several years. So I'm glad to see them raising $5 billion. If they really wanted to put themselves in the driver's seat for the next, the next 5-6 years, they ought to raise a lot more. I think CEOs, including Mr. Musk, spend too much time trying to demonstrate that they don't need to sell stock, to be honest.